Okay, great. Thank you, Sudarshan. And thank you to the SBDC. Bringing people together and building a community expands our capacity to serve more and with higher quality. And together we can achieve collective missions to start, grow, and expand small business and recover from disaster. And part of the mission of the SBDC to help small businesses to succeed. So thank you for this opportunity. It's an honor to be here today. And we're gonna go through some quick slides on the PowerPoint and talk about economic aid, namely the Economic Injury Disaster Loan. Can we bring that up, Lynn?
Lynn, let me know if you have any issues. I can bring it up.
I do.
Okay, no problem. Let me pull it up.
I have it, but I can't find it on my, I opened it and I can't find it. No, thank you so much. We love backup.
Oh, absolutely.
And then I'll be also putting the links for everybody in the chat box to access all of the programs that we'll be talking about.
Great. Is that okay, or do I have them backwards, Jamie? I apologize.
No, it's great.
That looks good on my end. Thank you. Yeah, so Jamie Pritchett Solorzano, United States Small Business Administration. I'm an economic development specialist and admin officer at the San Diego District Office. And we're going to quickly run through these slides, and I'm going to try to keep it super simple because, as Sudarshan said, navigating our programs sometimes is a challenge. So the goal here is to transfer knowledge in a simple manner. So let's head on through. Okay, so one of the things that we share in common with the Small Business Development Center is our San Diego District Office services both San Diego and Imperial County, also known as the Valley, which is nearly 8,800 square miles. So we have a huge service area. And San Diego is one of 6 district offices in the state of California. So the SBA and the SBDC has a huge presence in California. So we're fortunate for that. And yeah, so let's get to the next slide, please. Okay, so since the pandemic, we've rolled out numerous programs, COVID-19 relief funding options, both loan programs and grants. And today we're going to talk about the Economic Injury Disaster Loan, which is that third one over in this slide. This kind of takes us through all of the programs: paycheck protection, debt relief, the EIDL program, the Restaurant Revitalization Fund grant, and the Shuttered Venues Operators Grant. And the SBDC has been with the SBA to roll out these programs. And I know many of you lenders as well have worked hard. And thank you very much. And so let's talk about where we're at right now with Economic Injury Disaster Loan. Okay, so every day I speak with small business owners that for one reason or another don't know about the Economic Injury Disaster Loan. So I'm going to start from the beginning. What is it? It's a low interest loan which provides relief to small business and nonprofit organizations that are currently experiencing a temporary loss of revenue due to COVID-19. So the purpose of the loan is to meet financial obligations and operating expenses. This loan is all-inclusive. It also includes independent contractors, agricultural businesses with fewer than 500 employees. So there's a lot of potential eligibility here. So if anybody has interest in the Economic Injury Disaster Loan, information is available instantly right now on sba.gov. And also our resource partners have all of the information on the Economic Injury Disaster Loan. So we want to make sure we put that in the chat, the link to SBA's disaster loan assistance. And I also want to add, we have it in multiple languages. So language and technological barriers do not exist. If you are not a native English speaker and English is your second language, and you don't feel comfortable with completing an application, or for whatever reason, you don't have a computer available, or you feel like you need assistance with an application, we are here for you. So do not let any sort of barrier get in the way of you seeking economic aid. So, okay, let's talk about, I've listed here the loan amount, the terms, and also something that's been going on recently with respect to loan increases. So right now, economic injury disaster loans, the terms for the loan are 3.75% for businesses, and that's fixed. And then it's different for nonprofits, 2.75 for nonprofits, fixed 30 years, up to 30 years, and no prepayment penalty or fees. So if it turns out you want to pay off that loan in advance of the term, you can absolutely do it. And what we're doing right now is for the folks that have already applied and have a pending economic injury disaster loan, we're processing increases. So depending on where you're at, you're potentially eligible for an increase. And there's a couple ways you can do that. The SBA has been contacting our current pending economic injury disaster loan applicants or recipients and sending them an email advising them that, hey, there's an opportunity to increase that economic injury disaster loan. So some folks have been receiving an email. Others can tap into their portal, and or they can contact SBA.gov. And again, all of this information that I'm sharing with you today is available online. So you're not going to miss anything. If after this discussion you have a question, SBA.gov, that's where all of this information I'm sharing with you comes from. Okay, so let's go to the next slide. Okay, so this is really important, Lynn. I know you always put this in the chat. How do you apply? So we've had numerous programs roll out, and some of them have followed different paths to application. For the economic injury disaster loan, what you would do is get your paperwork together, prepare, get your taxes together, reach out if you need help, read everything on the website, and do your homework. And then set aside some time with all of your information because you're ready for that information. And you get on SBA.gov and you click on a link, and that's going to shoot you directly into an application that you would complete. And my advice is to set aside some time so that you do that application all in one session, and you apply directly online, SBA.gov, instantly, and it's the streamlined system. And so that's how that works. So long story short, you apply online on SBA.gov for economic injury disaster loan. Okay, I included this in here really quick because us in San Diego County are, we have wildfires that happen. So also available on SBA.gov is disaster preparedness. There's actually a checklist for preparing your small business in case of a natural disaster. And please check that out. A lot of great resources. Again, SBA.gov, prepare. Okay, so staying in touch. Staying in touch is important with both the SBDC and the SBA, and I'll tell you why. Regularly, we are receiving press releases out of Washington, and they are sent directly to our district office, and we send them out. So subscribe to our newsletter. Anytime there's an update to one of the programs, information is shared in real time. And you can also visit the San Diego SBA district office website for resources, and also follow us on Twitter. So there's numerous ways to communicate with us online. on the phone, through our newsletter, and also, of course, with collaboration with our small business development centers. Okay, and I think that's it. Sudarshan, do you have any questions or anything you need us to add?
No, the only thing I would say, Jamie, first of all, thank you so very much. And I know that I have worked with many other SBA district offices. Our relationship with our own SBA district office here in San Diego has been phenomenal. And we often need help for our clients, and we are able to send them your way. So appreciate it a lot. Thank you so very much, Jamie. Have a wonderful weekend. Of course, you're welcome to stay for the rest of this meeting.
Thank you very much, Sudarshan. Thank you, everybody, for having me, and I wish everybody the best.
Take care. Bye-bye.
Take care.
So folks, let me share some additional information with you about some of the other funding opportunities that are available at the state and city county level. The California Relief Grant had a new fund amount put into it, $1.5 billion. So out of that, the $1.5 billion is being spread out over 3 rounds. The first round is basically for people who were waitlisted from the last go round, right? So those people who had applied to the last go round do not need to reapply. They would automatically and are being considered for the first round of this new program. The next program would be, of course, for community-based organizations and things like that. So if any of you are in that category, please go to our website, sdivsbdc.org. And I'm sure Desiree Lynn will put some link in there. You're familiar with our website. Take a look at it. So that is a great program, but for all small businesses who did not apply earlier on, or if you were a nonprofit, had applied as a nonprofit, but also have a for-profit business, then you will have an opportunity to apply for the CRG, the California Relief Grant, starting on September the 9th. So just be aware that at the SBDC, we have a lot of business advisors who have the knowledge to be able to help you navigate that process. So take advantage of the services that we provide by going to our website. Now, the third thing I want to talk to you about very quickly are our city and, mainly City of San Diego and all our 5 county districts. There's a lot of funding available there. So I encourage all of you who are looking for funding and haven't already tapped those particular resources to please do so. So with that, I'm going to go on and move to our wonderful panel. Time is of the essence, so I'm going to request each of you to be as tight with your answer as you possibly can. And it's likely that I may not be able to ask you all the questions because I do want to save time at the end of this meeting to be able to address individual questions from our participants. So with that, let me go ahead and start with each of you. And I have the same question for each of you. And that is to please introduce yourself and your organization and to give us a brief overview of the lending programs that you provide. So we'll get started with Miriam.
Hi, Sudarshan. Thank you. So yes, my name is Miriam. I'm with CDC Small Business Finance. CDC has been around for 40 plus years. We are a nonprofit lender and we are mission oriented. So our mission is to be able to help small business owners that are not yet ready to go to a bank. So they're not ready for traditional lending yet. So we hope to be able to, give you some lending and then eventually you can graduate and have your pick of any bank and let them fight for you. But until you get there, that's a little bit about what we do. About 50% of our loans are startup businesses. We also help existing small business owners and people that are looking to acquire a new business as well, which we are seeing a lot of right now. And our interest rates are anywhere between 5 to 8%. We have some fixed rate options and no prepayment penalty, and most of our loans are 10-year terms. So that's a little bit of a snapshot about what we do.
Fantastic. Thank you, Miriam. So we'll go on to the next person, and that is Melissa. Melissa, if you'll unmute yourself, thank you.
Thank you. Good morning, everyone. My name is Melissa Kresser. I am with Wells Fargo Bank. I serve the San Diego and Imperial Valley. Currently, we are offering SBA loans, which are 7A and 504s. Of course, conventional financing. We do have unsecured products like lines of credit and credit cards. And then we do offer secured asset lending up to $500,000. In addition, we are doing equity loans and equity lines on commercial properties, and we also have we have a grant right now where nonprofits can apply for. So that is something that is also accessible through Wells Fargo. Thank you.
Thank you, Melissa. And now hear from Renee with Comerica. Renee, if you'll unmute yourself, please.
Hi, everyone. This is Renee with Comerica Bank. We've been around for over 170 years, and I have been in banking for over 30, so we definitely have a wealth of knowledge. We are a business bank. We look for the relationship with the client. My minimum loan amount is $10,000 up to $750,000. I cover all of San Diego County. So I go all the way from the border to right up to Oregon, and we do lend in 5 states. We offer traditional financing for businesses. We offer owner-occupied real estate, equipment, business lines of credit, and SBA financing as well. So we've been up and running for the whole part of COVID or through COVID, and we are still here. So thanks again, and back to you, Comerica Bank.
Thank you so very much. I'm sorry, I skipped one person there in my line here, and that's DeWitt. DeWitt, please introduce yourself.
Hello, I'm DeWitt from Pacific Premier Bank. Pacific Premier is one of the oldest commercial banks that's headquartered and chartered in California. We're a business bank and a real estate bank, so the types of business loans that we focus on, it's going to be loans that start as small as $5,000 and go up to $50 million plus. The interest rate could be as low as 4%, maybe even a little bit lower than 4% for business lines of credit, business term loans. And generally it's going to top out at about 6.25%. The types of loans cover everything from SBA loans, which we do nationally, conventional lines and loans, which we also do nationally, state guaranteed lines and loans, which is for California businesses, HELOCs, personal lines of credit, personal loans. Different scenarios could be anything from working capital, growth, expansion, new equipment, new locations, hiring new employees, buying commercial real estate for the business, and really almost any business scenario that requires capital.
Thank you so very much, DeWitt. So let's go ahead and get an introduction from Fernando.
Good morning, Fernando Ponce with Primary Funding. Primary Funding is a locally based firm. We've been in San Diego for over 25 years. We really focus on clients that are not bankable. So for the most part, if you're either having trouble getting approved by a bank or because of time in business, cash flow, collateral, that's where we're going to come in. We're typically going to focus more on B2B industry type businesses. So you sell directly to other businesses. But we are an asset-based lender. So if you have some assets, it could be real estate, personal or business collateral, sometimes we can leverage those things as well to try to get you funded. Thank you.
Awesome, thank you. So we'll go ahead, Larissa, if you would please introduce yourself.
Hi, good morning. My name is Larissa Urias. I am the Business Development Officer for Accessity. We have also been in the area of San Diego for 25 plus years. I am the Business Development Officer for the areas of the Imperial Valley and also the area of Coachella Valley, but we do service the Inland Empire, San Diego, and the Riverside County. Here at Accessity, we are also a nonprofit. We do loans from as small as $300 up to $100,000, and our rates are from 6.99 up to 14.99%. And we also service people who are seeking into getting money to start to start up their business or also to expand their businesses. And like my friend Miriam, Fernando, we do loans that people are probably, they're not bankable just yet, but we give them that opportunity for them to get some funding and get the wheels going and then eventually be bankable. Thank you for having me here today.
You're very welcome. Thank you so very much. So let's go ahead then to Fred. Fred, please introduce yourself.
Morning, my name is Fred Crispin. I'm Senior Vice President of United Midwest Savings Bank. We're a nationwide preferred SBA lender. We're actually the 5th largest SBA lender in the country as far as number of loans go. I manage the small loan division for the bank that drives those numbers. We make working capital loans for startup and existing businesses from $20,000 up to $150,000 under the SBA 7A program. It's a credit scored program. Probably 93% of the businesses or the loans we fund every month are pure startups, meaning the day we fund that loan is the day the borrower is opening their doors for business. These are all 10-year working capital loans, priced at prime plus 3 1/4 to prime plus 2 3/4. So that'd be basically either 6 or 6.5% in today's environment.
Thank you so very much, Fred. So obviously, folks, the most important thing is to try and understand that, you know, the folks that we have here as our panelists, they're all in the business of finance, and their business is to try and help you get the financing that you need to take your business to the next level. But the important thing for you always to understand as a borrower is that you have to be able to convince the lender that you have to have the capacity to be able to service the debt, meaning that you're able to repay the loan and the interest on it, and you're able to repay the loan and the interest on a timely basis. So all these financial institutions are custodians of the public's money most of the time. So they have to be very, very careful not to take unnecessary risks, right? So because of that, they have to go through a fairly thorough due diligence with you. And I'm going to jump in and then ask each of our panelists here to please, if you will, tell us what does it take for a client to get funded with your organization? And I will change it up a little bit here, and I will start with DeWitt at Pacific Premier Bank.
So the minimum criteria would be 12 months in business. So if we're lending to an LLC or a corporation, it had to have been established at a bare minimum 12 months ago. If the business has only been around for 12 months, the guarantor would need a credit score, probably about 660 or higher. And that would be for a loan amount up to $50,000. If the business wanted to apply for something, say between $50,000 and $250,000, then they would need to be in business 24 months or longer and have a 680 credit score. If the business wanted something that's smaller than $50,000, then the credit score requirement drops down to 620. So if someone just wanted a $10,000 loan or a $20,000 loan, and they've been in business for 12 months, they could probably accomplish that with a 620 or higher credit score. And all of these products, you can apply for them with a 2-page application. And really anything that's over 100,000, that's when we're going to require year-to-date financials from the business, either year-end financials or the most recent tax return, and a business debt schedule, and 6 months of bank statements. And then above $250,000, that kind of gets into conventional lending, where at that point we would require, several years in business, a couple of years of tax returns for the business and the guarantors, year-to-date financials, year-end financials, bank statements, and a business debt schedule.
Thank you, DeWitt. You make an excellent point, and I would emphasize it to all the listeners here, participants. Please make sure that you have your accounting, which is contemporaneous and current and accurate all the time. And going with that is to make sure that you file your tax returns on a timely basis, because when it comes to a lender, the one thing they're going to look at is your tax returns to make sure that the numbers speak for themselves. So without all that kind of information, it's going to be very, very difficult, if not impossible, for you to get funding. After all, you have to be able to show that you're able to fiscally or financially manage your business. And that financial management is reflected through the accuracy and timeliness of your accounting records and your tax preparation. All right, then, so we will go ahead to Melissa. Same question for you. What does it take to get funding from Wells Fargo?
Thank you, Sudarshan. Well, we do offer many different products. So depending on what we're working with, it will vary. But if we're doing a startup, we are looking for you to have some type of experience within the industry. If we're looking at refinancing an investment property, we're asking for 2 years of tax returns to make sure that the property can cash flow. We're taking a look at the tenants to make sure that the tenants are in industries that are not high risk. Also, if we are doing SBA financing, again, we're looking at a few years worth of tax returns. We're looking for a business plan. We want to, see what your thought process is, and we're looking at projections to make sure that they're in alignment with what your goals are for that. If we are looking at unsecured credit under 100,000, traditionally that's a very simple one-page application. But if we're going to be doing more asset-based financing, then again, we're going back to the 2 years and asking for year-to-date interims and so forth. So it really depends on what the request is. And, the main thing is working with you to make sure that we collect the full package to be able to present to the underwriters and be able to tell your story. Thank you.
All right, thank you, Melissa. You emphasize a very important point, having experience in the business that you're looking to start. Of course, those people who are already in business hopefully have experience in that particular area. So make sure that you have a well-documented, format, and of course, be able to show that you have depth within your organization, because it's very difficult sometimes, particularly on existing businesses, to lend money to an organization which depends only on one person. So just be thoughtful of those kind of things. All right, thank you so much. And we will come to Renee at Comerica. What does it take to do business with you?
We look for businesses that have been established a minimum of 3 years. So we do not do any startup businesses. We look for a minimum credit score of 640 and above. So it's not that high. So that's a good way to go. We do everything from unsecured SBA equipment financing and owner occupied real estate. So my rates vary between 4 to 5%. It depends what I have as collateral or if I'm going unsecured. I am going to collect tax returns, and I am going to collect it because we're already in August, profit and loss and balance sheet. And I will say that is probably the hardest piece to collect from some businesses. So like we're talking about, if you guys can have your tax returns organized or copies of your extensions if you haven't filed your 2020, but a profit and loss and balance sheet, because we're almost, through the end of August to show what you've done, especially if you're coming out of a COVID situation and your business has been negatively impacted, but you're on an upward trend. That's a great way for us to see that. So keep that in mind. But like I said, our rates vary anywhere from 4 to 5% depending on what I have as collateral or if I go unsecured. But I do need a business to be established for a minimum of 3 years.
Thank you, Renee. And it's also very important for each of you who are participating here to know that, a lender is primarily going to first look at your business entity to see whether the entity has the capacity to be able to repay the loan and the interest. But it also then is going to look at the people behind that entity to make sure they have the credit as well as the collateral as and if needed. So thank you. So let's go to Fernando. Fernando, tell us what it takes to do business with primary funding.
Yeah, so really we're more of a asset-based lender. So primarily we want to look for accounts receivable or purchase orders that you have that we can leverage to finance. So you're on the invoice side, you're doing the work up front or providing a service or a product, you've delivered on that, and now you're waiting 30, 60, 90 days to get paid. That's where we come in and we finance those invoices to provide the cash up front so you can make payroll, cover all your other overhead, and continue your business cycle without any interruption. On the front end of that, if you have purchase orders that you're having to fulfill, we can many times finance the cost of goods for those purchase orders up front. so that you can continue that cycle again and keep moving forward with your business cycle. So that's really where we're going to be at our strongest. But as I mentioned, with the assets, I mean, we'll look at all types of asset classes. We'll look at real estate, we'll look at equipment, we'll look at inventory sometimes. So it just really depends on what the situation is, but we definitely prefer to have accounts receivable. Personal credit really isn't a factor in that situation. We're really looking at the strength of who you're selling to, right? So if you're selling to Amazon and, you know, Apple or, you know, Home Depot, larger companies that are more established that we know are going to pay, that's really where we're basing our decision off of, as opposed to the strength of your company and the current financials.
Thank you, Fernando. And of course, a very strong point to make when it comes to accounts receivable financing is to make sure that your accounts receivable are not getting too old. So make sure you stay on top of your accounts receivable, because the funding usually is cheaper for, you know, accounts that are fairly current. The longer they are outstanding, the more expensive it might get. So, and same thing with inventory. Inventory has to be something that is turning fairly quickly. If it's sitting there for years and years and not moving, that probably is unlikely to get financed. So with that, we'll go ahead and talk to Larissa. Larissa, what does it take to get funding with Accessity?
Yes, here at Accessity, like I mentioned earlier, we do startup and expanding businesses. The first question that I am going to ask is, how much money do you need? And if you tell me, I don't know, you tell me, then I'm going to send you my friends at the SBDC. So I do need you to know how much money you need. If it's going to be just for overall, for all the loans, we do need an ID. If you're in the city of San Diego, we need the tax certification and the certification form, proof of income, copy of title of current registration. We don't ask for collateral, but if you do add collateral, it's just going to help you with your interest rate. And we do ask for startups, business plan, and financial projections. If you don't know how to do that, like I said, you guys can go with the SBDC to get help on that. And if you're purchasing a business, we just need the purchase agreement, 1 year of tax returns, and the profit and loss statement. If these are for loans that are $8,000 and over, we need the 2 most recent bank statements and 1 year of tax returns. If this is for $8,001 up to $100,000, we do need 2 years of complete tax returns, both personal and business. If you don't have business, just your personal, and the most current business financials and the business entity. Also, if you are someone that, you know, you're just starting up and you're also in the business, we do need you to show capacity to repay the loan. So if you are starting up a business and you do have a job, I suggest you guys don't leave your job, because that's going to help you guys to show capacity to repay the loan. We don't ask for any minimum FICO score, so that's a plus, but we do ask for you to be on time payments for at least 12 months.
Thank you so much, Larissa. So Fred, tell us about what it takes to do business with your organization.
It's a credit scored loan program, so it all starts with a simple loan application that we have online. You can reach it at either sbdc.loan or smallsba.com. Either one will take you right to the loan application. We credit score using the Fair Isaac small business scoring model, better known as liquid credit. I've been using that model since 2003 in these small loans. SBA adopted that same model about 3 or 4 years ago, and now all small loans 350 and below get scored in that scoring model. That model is looking at a lot of different things. Personal credit's heavily weighted, but it's also looking at the industry you're in, the risk of that industry, time in business, percentage of revolving available to you, how many people's actually pulled your credit. So your personal credit's important. You need to make sure before you apply for a loan that you check your credit, make sure there's not erroneous information on that report. From there, if we approve the score in the model, then we'll assign it to a packager processor who will send you a checklist of everything we're going to need to move it down that assembly line, so to speak. And that'll include a history of business questionnaire, 2 years of projections, and we'll give you an Excel spreadsheet to put those in. But if you've worked with the SBDC and developed a business plan and a model, you'll easily be able to fill that information out quickly.
Thank you, Fred. And Miriam, what does it take to get funding from CDC? Miriam, you there? Yep.
Yeah, can you hear me?
Yeah.
Oh, okay, perfect. Sorry about that. Yeah, so for us, we are going to be looking at, I guess, the traditional items. So we're going to be looking at, cash flow, and we're going to be looking at the credit score. Our credit score minimum is 620 for all of our loan products that are not commercial real estate, and I'll talk about that later. But then, of course, we do a lot of startups. As I mentioned, half of our loans are startups. So anything from the conception of just a business plan and projections, we'll be looking at those for the business to cash flow. And then personally, we'll want to make sure that you can personally cash flow if you're starting a business. So you'll need to have some source of income, whether that's a spouse or money in savings, or you have a job or you get your business started, whatever that might be. That's what we're looking at when we're looking at a startup. And then for an existing business, we're looking at the same thing, 620 credit score, and we're still looking at you personally, but we're also then again, hopefully looking at a tax return of a year or more for your business to see if it cash flows. For acquisitions, it's kind of nice because even if you don't have income or other sources of income, the business that you're purchasing, the way that we would approve it, of course, is that it cash flows. That new business that you're purchasing may permit, you to personally cash flow as well as the business. So those are the major things that we're looking at. The other thing that we're looking at is, that you don't have any outstanding, not that you can't be late or that you can't have collections items or in credit, but credit for us, as it is for all lenders, really has a lot to do about your character. So we want to make sure that you are up to date on everything. You've set a payment plan, or you're current, even though you did have a late in the past. I would say those are the majority of things that we're looking for. We also join, our bankers, like Melissa, for example, or Renee, when they do 504 loans, and those are commercial real estate. So for commercial real estate, we would go up to up to 5 million, and then it would be combined with a bank loan. So for example, and if you come to us and you want to purchase a commercial property for $1 million, what you would do is first get pre-qualified with your bank, and they would qualify you for 50%. We would qualify you for 40%. And then you, as the borrower, would come in with 10% of the purchase price. And so it is the cheapest way to get a commercial property once your business is more established, at least 2+ years in business, that you're cash flowing and doing well. So I think those are pretty much the parameters for our loans.
Thank you, Miriam. I think most of you have already touched on what kind of businesses you would, finance or not finance. But let me just go ahead to, if I may, to Melissa. Melissa, are there any kind of industry sectors that you would not finance?
Well, we wouldn't finance, your typical businesses that have to do with like marijuana, or companies that have to do with CBD, adult industry types of businesses. Those are ones that we would not get involved with. But besides that, we're open to looking at a request, and if for whatever reason it doesn't fit our space, then we would connect with Miriam or Fernando and see if we have other options for our customers.
Thank you, Melissa. So just to make sure that we do have some time at the end here to have some questions from the participants, I'm going to skip some of these other questions and move on to some other ones. So what I want to ask the next person, who is going to be Renee at Comerica Bank. Renee, can you please tell us what do you think are the first steps a small business should take if they want to access capital?
My suggestion would be make sure you have your financials in order. So you have, at least for me, 3 years tax returns, your profit and loss and balance sheet. I know somebody mentioned earlier, stay current on your taxes due. I'm running across a number of customers that did well in 2020, and they got a huge tax bill and they haven't been able to make the payment on them. So my recommendation is stay current on your taxes. I know it does take some time to get a payment plan with the IRS. And we can work with payment plans, especially when we do SBA financing. But if you can keep your books in order, like your profit and loss and balance sheet, you know your numbers, like your annual revenue, you know what you're looking for. I have customers that come to me on a regular basis and say, give me the maximum. And then I have to go back and talk to them about what they're going to use it for and how much they really need. So be up to date on your business, know your numbers, keep your credit score as clean as possible, and stay current on your taxes. That would be my recommendation on getting ready to be able to apply for a loan.
Awesome. Thank you so very much. And I'm going to go next, if I may, to Fernando. Fernando, what is the one thing that a business should never do to get funded?
Never do to get funded. Well, that's a tough one because we fund a lot of businesses that do things that you shouldn't do to get funded. But I mean, I will say, you know, kind of in the line of what everybody's been talking about. I mean, your financials are really kind of the marker, you know, for a lot of what you're going to be able to get. So the worse off your financials are and the worse effort and you know you put into them, it's just going to limit your options. So it's not necessarily that you won't be able to get funded, but you might have some really bad options that you otherwise, you know, you really wouldn't want to take. A lot of these really expensive, you know, daily debit types of loans where you're, you know, they can really hurt your business in the short term and in the long term. So I would just say, you know, having those financials put together, knowing what you're going to want is going to just allow you to get better quality loans than what you might, you know, have to settle for if you're not putting effort into those things.
Awesome. And the one other thing I would add to that is please be totally candid and truthful with your business advisor at the SBDC as well as your financial institution. We end up many times when people are less than truthful, particularly when it comes to things like bankruptcies and things like that. The minute you have not clearly defined that as a challenge that you've had in the past and what you've done to overcome it, and if it's left to the banker to find out, that's going to be a big no deal kind of situation with you. So be totally candid and totally honest with your SBDC advisor as well as your financial institutions. So tell me, if you will, and I'm going to ask Larissa this, tell me about a recent loan that you funded.
Yes, a recent loan that I funded. I think one could be, we did a lot of COVID relief loans, which I want to let everybody know that we still have funding for that. So if you've been in business prior than June 2019, we still have the California Rebuilding Fund going on. That one's a rate of a 4.25% with the first 12 months of interest payment only. We did help out a client who she had been in business. She came to us because she wanted to grow her business. So she grew her business, but then the pandemic started and she was able to come up with a plan in order for her to come up with money during the time being that she couldn't have people come in her restaurant and she didn't want to pretty much be low on her funds. So she started making like breakfast burritos, and she started looking into ways where she could sell some breakfast burritos, and she found a local gas station where she was able to just every morning she goes, she puts her breakfast burritos in there. She sells about 2,000 burritos a day, and boom, she just leaves them and she moves out. So she had a decrease in sales during COVID. So she was able to get the funding for the California Rebuilding Fund, which that one we only fund up to $50,000. And she was able to just buy more equipment to transfer the burritos from her restaurant to the gas station, which is about maybe 20 miles away from her restaurant. And her name is, if you guys ever want to search her up, she's in the Imperial Valley, Nana's Kitchen, and she's a really successful story. And if anyone is looking into ways on how to pivot during the pandemic, I can absolutely connect you with her in order for you to get more ideas. She's always willing to talk to other people about her story.
That's awesome. Thank you so very much. So Fred, you know, we've all come through this pandemic and unfortunately are probably still in it. How are you looking at the funding for any small businesses given the economic downturn that took place on their, you know, last 18 months of financials?
Well, it's the majority of what I do are pure startups. They haven't suffered that problem in the past, but one of the main questions we ask is, how are you going to be able to operate in the next year, given the current COVID conditions? What effect will that have on your ability to generate income? And have you really addressed that in your projections? That's a key issue with us and with SBA. SBA requires that we look at that very closely.
So you make an excellent point, Fred. You know, we all have had to pivot during these last 18 months. So we've got to be able to show to a financial institution what that pivoting has been and where it's leading to, right? So to be able to do that, please work with your SBDC advisor who can help you put projections together. You know, several of the financial institutions have referred to a business plan or financial projections. In the end, what is a business plan? It's your roadmap to success, right? Something that you're going to track yourself against. If you do not have a business plan, my feeling is that you have a plan for failure. And certainly when you go to a financial institution looking for funding, not only do they need to see what your historical information is if you're an existing business, but also where do you think you're going to go? What happened to you during pandemic and where are you going to go beyond that, right? So it's up to you to be able to convince the lender that once again, what they're looking for, you can provide. And that is capacity to be able to service the debt, meaning being able to pay the loan back and the interest on it, and be able to give them assurances in other ways, like providing collateral, having good credit, and all those kind of things, experience, which are all very, very fundamental and important. So I just at this point in time do want to thank all the panelists. I know that there are several other questions I would have liked to address at this point in time, but I think we've covered most of the important issues. We do want to hear back from some of our participants and see what kind of questions they have. But before I have Desiree read out some of the questions to me, I do want to emphasize to you once again that financing, just like everything else, is a process, right? And the process with the lender really only starts when you have provided them all the information that they need. That includes all the documentation that they request and all the projections and tax returns, you know, net worth statements, all those things have to be provided. It's only then that the clock really starts clicking. Do not frustrate your financial person by giving them things piecemeal. They have many, many loans that they're working on. They have deadlines to meet. So please help them by making it easy for them and providing them all the information. Our SBDC advisors can help you prepare your package. We work with these folks hand in hand all the time. So we know what they need. So work with your SBDC advisor. So thank you. With that, Desiree, if you would please ask the first question.
Yes, so the first question is from Matthew. We are doing a startup for a structural steel fabrication shop. We will need startup funding for equipment, mostly in payroll. We do have cash from our house. Is this feasible?
So let me forward that question to Fred.
Well, SBA requires that you put in a minimum of 10% of your own capital into a deal. And then we want to see that on a startup, you've got at least another 50,000 sitting in an IRA, 401k, checking, savings, marketable securities. You've got some fallback to bail yourself out if you get into a problem. So if you're looking at a startup, you got to put your own money in. Cash or equity in real estate doesn't count, because basically these are unsecured loans from our standpoint. We'll take a lien on the business assets, but that's it. I'm not taking a lien on your house or your firstborn child or anything else. So that equipment We'll take a lien on it. We'll take a purchase money UCC filing on it, but that's all we have to liquidate if that loan goes bad.
And from experience, I can tell you that it's easy to spend OPM, other people's money. So it's very, very important that you have skin in the game. You have to feel the pain in case your business does not work out, right? Because in the end, all these financial institutions are, the custodians of other people's money, including some of us, right? So it's very, very important that you be able to put skin in the game. All right, Desiree, next question, please.
The next question is from Patrick. How does one decide on a lender that is right for a particular situation? Why should I pick one over the other?
Well, here's what I would suggest to you. Please don't send your packages or information to all the lenders. First, work with your SBDC advisor to determine exactly what your needs are, what your business is, where you are, where you're trying to go, and what are the hurdles that are keeping you from getting to where you want to go. Once you've done that and have been able to establish what kind of funding you need and are fairly concise with the amount you need and the purpose that you need for, then we at the SBDC work well with all these folks. We can guide you and say, hey, maybe you want to talk to this particular person. And we will help you make sure that you have your package ready and complete. And we will have a brief conversation and make an introduction if appropriate with your permission so you can talk to the right lender. All right, Desiree, the next question, please.
The next question is for Sean. He wants to know how a business that just started before the pandemic and does not have 2019 revenue would try to find funding.
Well, once again, so is this a startup?
He just has a general question about people who just started businesses right before the pandemic started and who have no revenue for 2019.
Yeah, that's been the case with many, many people. And there have been people who've acquired existing businesses that were in business in 2019 and got caught very early in 2020. There are going to be some difficulties, right? That doesn't mean that they're not fundable. The question simply is, what are they doing post-pandemic or during the pandemic? So I will ask, if I may, DeWitt, do you have a more specific answer to that? You will unmute yourself.
So if a business started just before the pandemic and suffered a decline in revenue throughout the pandemic and now is back on the upswing, I think what the most important thing is going to be to have really high quality financials that are able to demonstrate the upswing. It would probably be pretty challenging for me personally to lend to a business that didn't have very much revenue in 2019, went through the pandemic, and now has, substantial revenue. I think if it's a business that produces a tangible product, like a retail product or some other type of product, that it might even be a better fit for someone like Fernando that would look at the actual receivables and say, well, they didn't make money in 2019, they had challenges in 2020, now their sales are going up, and maybe that's something for more of like a non-bank lender or someone like Fred, but that wouldn't be something that I would be able to finance.
Understand. Thank you. It's coming right on at 10 o'clock, but Desiree, let's squeeze in one more question.
Okay, the next question is, if you've already received an EIDL loan, how can you request a loan increase?
Well, you certainly can go directly to the SBA, and Jamie shared that information. Jamie, you're still there?
Hi, I am still here, and absolutely. So there's a couple ways. If you've already have an economic injury disaster loan, number one, reach out to the Small Business Development Center so that they can also see if there's other types of lending available that's out there, such as the grants. Number two, if you have access to your economic injury disaster loan portal, check that out. Three, check your email. SBA contacted lots of folks that already had a pending economic injury disaster loan. They sent them an email and an invite to create an application for the increase. And thirdly, SBA.gov at updates. You can send an email and request information there. So, and lastly, you can contact me as well.
Thank you, Jamie. And just to reconfirm what Jamie was saying, yes, the EIDL is still up and alive, and definitely happy to help you. This program, I think, Jamie, goes on through December 31st of this year, the EIDL for the COVID-19. Yeah. Absolutely, through December 31st. And yeah, you do have to have been in business in January of 2020. But the program is alive and well. And if you think there's potential eligibility, what Sudarshan and I are always telling everybody is to investigate that eligibility and get an application and get a decision. And there's frequently asked questions. I think Lynn posted them to the chat that are very comprehensive, and they actually go through various business scenarios when you started business, whether that was if you're a new startup. And it goes through and talks about the maximum loan amounts and the calculations. So IDLE frequently asked questions available online. It'll answer every question you guys have. Thank you so very much, Jamie. And thank you to all our panelists. We appreciate your commitment to continuing to support small businesses, particularly in these very, very challenging times and going forward. And I want to thank all of you, the participants, for coming on to learn and expand your knowledge so that you can access funding. Remember, the SBDC is funded by all of you through your tax dollars. We're here to help you. So do not hesitate to come reach out to us. We provide confidential counseling. So there to help you make a positive economic impact. With that, thank you so very much. Everybody stay safe, stay well, and we will have another one of these events in September. So you're welcome to come back. Be safe. Take care. Bye-bye.
Thank you. Happy Friday.